Welcome to the first panel. My name is Sabrina Howell. I'm a professor of finance at NYU Stern, and my research and teaching focuses on entrepreneurial finance and innovation. I actually created Stern's first fintech-focused entrepreneurial finance course for this spring, so I'm especially excited to be here and learn from our distinguished panel of experts. I'll briefly introduce them and then jump into questions. So Bernardo Bonjean is the founder and CEO of Avante, which provides microfinance to micro entrepreneurs around South America. Before starting Avante in 2012, he had a number of interesting experiences, including a long career in financial services, which he appears to have abandoned in order to pursue interesting activities like the Dakar Rally on a motorcycle. So we can ask him about that later. Dubie Cunningham is the vice president of digital banking and enterprise innovation at Scotiabank. And she's had a number of interesting leadership roles at Scotiabank, including leading the innovation team at the Digital Factory. Currently, she's running Scotiabank's digital transformation strategy, which includes fintech collaboration and partnerships. And she has an MBA from Henriette Watt University in Edinburgh in Scotland. Renato Hopf, or Zay as he likes to be called, has undergraduate degree from Catholic University and an MBA from FGV. And he began a 25-year career in financial services at Banri Sul. But in 2003, he founded a payments company called GetNet, which rose to have over 2,700 employees, and that he sold in 2014 to Banco Santander for over $1 billion. He then became a serial entrepreneur by founding his second enterprise, For All, which is a kind of a financial integration platform aimed at South America, which we'll talk about. And last but not least, Edgar Perez has had careers at McKinsey, at IBM, and at Citigroup, but he is now a consultant and author. He's written 2 books, The Speed Traders and Knightmare on Wall Street, and he's an expert on cybersecurity, investing, trading, and financial regulation. So with that, we'll get started with some specific questions about that kind of will allow the panelists to talk about their companies and what they're kind of doing specifically. And then we'll zoom out to some larger, broader questions about what's happening in financial services and kind of what we talk about when we say the fintech kind of revolution or fad, depending on your perspective. So Bernardo, I'd like to kind of start with you. So Avante is focused on offering services to the poor and is structured, as far as I understand, as a B Corp. And I'd like to hear why you created it as a B Corp, and kind of more broadly, where you think sort of financial inclusion and social impact enterprises sort of fit in the fintech landscape, and how a company like yours manages kind of a profit and potentially an exit strategy with kind of a social impact agenda.
Okay. So first of all, it's a pleasure to be here, and the reason that I decided to create Avante, it's simple. I can resume in one quote, because it was not enough. What I mean, it was not enough. I'm spending 15 years working in the investment bank in Brazil. I had the luck to reach my financial independence very, very early in the crisis of 2008. Selling naked options. So I was in the right time, in the right place. And I decided to come back to school. So I took my after graduation course in Harvard. And I had the luck to meet one professor that is Robert Kaplan, that used to be the number 2 of Goldman Sachs and was a professor of leadership. And he addressed me a simple question. What I want to tell to Joaquim, that was my son, when he completes 15 years old. And despite I was proud like to do the Dakar, I think that I was in kind of dilemma if I took a sabbatic year, live in California, or create a new company. And then I decided to create a company, a B Corp, that is a company that was creating 3 pillars: people, purpose, and performance. To resolve a problem that is the financial inclusion. in my country and in all the world together, we have 3.6 billion people out of the system. So
can you explain quickly how a B Corp differs from a C Corp or an S Corp?
yes,
Yeah.
actually, it is a company that follow the rules of the conscious capitalism. So in the end of the day, they have a balanced relationship with all the stakeholders, the supplier, your employees, your clients, and even your competitors. So we have like a policy of open doors with all the competitors. And in my view, now the scenario, it's I'm very, very bullish with financial inclusion because what I'm seeing in the fintech landscape. So like to access the clients, in the past, we need the branch. So Avante is branchless. This is our branch. We have a team of agents with iPad that visit the clients that are in hero zones or in the Brazilian slums, the favelas. And another thing, it is the way that we score the client, because the system used to score the client based on the financial behavior. So now we have a lot of data, personal data, that is more meaningful than just to look the track record in the financial system. So now it's more easy than, for example, if you compare in the 90s when Compartamos, the largest MFI in Latin America, that took like 17 years to reach 1 million clients. Now we can reach 1 million clients in 5 years because of the technology.
Fascinating. Do you think that the use of big data and being able to see more about the customer than we used to be able to see in terms of something like a simple credit score is going to increase access to financial services? There are kind of people who think both sides of this, that using more data can wind up excluding people who are just bad, whose profiles just make them riskier, would never get access to financial services. On the other hand, people who sort of, for example, a student who's an engineer at a good school but may not have a credit background, we know from, if we can see what that person is, we can see that they're likely to be able to repay their loan. So it seems like it can go either way. But how do you sort of use data to increase financial inclusion?
Yeah, just to have one example, now we approved 62% of the total proposals that we received. We have an innovation lab in Tel Aviv, and we create our blend credit score in Israel. So we measure 3 things: your reputation, your character, and capacity of your business. Capacity of the business, in our model, it's 20%. So now it's very, very easy to collect data and to calibrate your model using artificial intelligence. So this is the way that we score our client. And if you look our number, our default rate write-off, it's 6% because of the data.
Interesting. So I'd like to move to Jose, who has also a digital platform technology aimed at the South American market. Can you talk a little bit about For All and kind of what the business model is in terms of convincing people that they really need all of their financial information integrated in one app?
I think it's not working.
Oh, here.
Oh, it's okay. Thank you. Thanks for it's really nice to be here to talk. And first, after we sold GetNet, I spent some time in Silicon Valley to understand what's behind in this Silicon Valley company, these exponential companies like Spotify, Uber, all these new companies. What is the secret? Because my dream is I would like to create a Silicon Valley company in Brazil, with this mindset, with this kind of things. We have a lot of startups in Brazil, but I'd like to do something understanding what is behind it. And what I saw, it's we are seeing a huge digital gap in the world. And most part of these traditional companies, they are not able to compete in the digital world. So a new startup can do many things really fast, and they are not able to compete. To the other side, people need a lot of apps, a lot of things, but nothing is in the real world is connected. So a huge gap for the people and a huge gap for traditional companies. Instead of creating a new startup to compete with the big banks, I decided to do the opposite. To allow the banks, to allow all the retail industries to compete with in the digital world. That's the secret in this platform. It's another perspective. We create a all-in-one platform with integration with startups, big technology companies. We have integration with Cabify, we have integration with Messenger, Facebook, everything. A lot of startups. We invest. We bought a lot of companies and put everything together in a platform as a service. And this platform allows soccer team, a bank, a retail, to be part of the digital market, to be there, not changing their legal systems, because it's hard to change it. It's hard to compete. So that's the main point. We create a platform, and we are running really fast in Brazil.
Can you talk about a use case? Like, give us an example of how it's used.
Like example, a soccer team. We created the first digital wallet for a soccer team. So it's possible to pay with the app of the team, or to use the bot, the assistance, and to pay, to buy the tickets for public transportation. It's possible to make an agenda. It's possible to do many kinds of this service that's common. We can find it in many apps, but in one platform, they are able to do that using their brands, because it's a platform behind it. So you don't know that for always behind. You know that the team like Grêmio, Flamengo, soccer team, they are running using our platform, but you don't know that for always behind. Only when you have to pay. So we have a digital wallet that you can put your credit cards now. In some month you put the bank account, and we are doing the same for banks too. We are running with 2 banks, and one it's a digital bank, and the other is a big, one of the largest bank in Brazil. We're running to put this platform to integrate, to create the possibility to do all the client journey. It's when at the beginning of the day we have to take your car to a park station or take a bus. You have to pay the lunch. You have to pay count. We have to bills. We have to do everything. So it's a complete platform to support in any part of the day, any part of your real day.
So is the client the soccer team, or the customer an individual on the bus,
both.
getting on the bus?
Both,
okay.
both. You have integration with Move It. It's the ways of for public transportation. We integrate with these big technology companies with one single platform with many kinds of usages that allows to provide for the final customer of our clients, the bank or the soccer team, to be part of the digital world using our platform.
I see. Fascinating. Okay. So I think these types of open APIs, is that what you would describe it as providing an API?
Yes,
are proliferating throughout the financial system.
There are many kinds of integration. We support it. It's like a mix of many kinds of things that you see here in America, like a Zuora as a subscription, as a Stripe, as integration for. It's a mix of all this kind of, but in only one platform. Only one platform. But they are not. The final customer is the customer of our client. It's a platform as a service.
I see. Fascinating. So Dubie, when the big financial services incumbents, the big banks, are confronted with all of these new sort of approaches and technologies and startups, they've pursued a variety of innovation strategies. So one is sort of outsourcing innovation. So for example, BlackRock purchased robo-advisor, Future Advisor, just kind of trying to buy the technology. A second is learning through competitions and accelerators from kind of the new innovators. So Barclays Accelerator, which is here in New York, would be an example of that. A third strategy is to take equity investments and kind of create sort of option value, as, for example, Goldman Sachs has done, buying stakes in everything from blockchain startups to Square. What have you found to be kind of the most useful strategy for Scotiabank, and what do you think the challenges are for the big banks in sort of swiveling the aircraft carriers, so to speak? Sorry, that was a lot. You can take a little piece.
We're sharing. So just a little bit about background about the Bank of Nova Scotia. We're a 180-year bank, Canadian bank, and we have 90,000 employees. We're in 50 countries, but the countries that we're most prominent in is outside of Canada is Mexico, Colombia, Chile, and Peru. We're also the we're the largest bank in the Caribbean. And the Caribbean heritage actually goes back to our 180-year history, where we were supporting, I guess, the startups of the day in prohibition times, doing rum running between Nova Scotia and the Caribbean. So we've always had a history of innovation. You're all supposed to laugh. So a couple of years ago, as we've all seen in the market, the rise of fintech and the rise of digitization, we realized at the bank that we had to make a massive transformation, and we realized what an opportunity we had globally in all our regions to participate in this wave. So what have we done? We have set ourselves very, very ambitious targets to become digital, to make all our services digitally accessible. Just to give you an example, and I love the story about microfinance, because in Mexico, as an example, a small business used to come to us, and it would take us, embarrassingly, probably 2 weeks, maybe more, to gather information, assess this customer, figure out whether we could lend to them or even not lend to them in some cases. And now, through the digitization and technologies that we put into place in partnership with a fintech, Cabbage, you can have funding in your account as a small business in 7 minutes. So this is the kind of ambition and aggression that we're approaching this digital change with. To get to your question about what's the right mix of all of those options, it's a little bit of all of the above. In certain cases, the bank will make, and many other banks like BBVA will make very strategic acquisitions. In some case, a full-blown acquisition, like we've seen BBVA actually completely buy up a startup and just integrate it within their own models. Investing into fintechs is a little bit of a complicated business, because we as bankers, we're probably not super qualified to show up and with the founder and tell him how he's gonna, or she, how he should run his business. So we prefer to do that with partners, with venture capitalists that actually know what they're doing. So we've partnered with QED. We have a LATAM-based focused fund that we launched in the fall. And another one in Canada called Georgian Partners. So we like to do it kind of in partnerships with the VCs. The other thing is we've built what we're calling digital factories in each one of these countries. Big, beautiful, modern, unbank-like facilities that is meant to attract the best talent, technological talent, design talent, and business talent. We launched those last year, and we've seen a phenomenal response that we didn't actually even expect in terms of the number of applicants, the types of youth, out of students they're coming. Some are undergrads, some are grads, some are co-ops, some are sort of 20-somethings, millennials. I hate that term. Millennials are coming. So it's a little bit of everything is the right formula for us in terms of how we respond.
Mm-hmm. So you mentioned partnering with VCs to make equity investments in fintech startups. What does Scotiabank get from that exercise? Is the goal returns, like VC-like returns, if this is a new profit center for the bank? Is it to try to learn and get inside access to these companies, or is it to create options for acquisitions? What's the goal?
Again, it's a mix. Of course, we want to make money, and we see in Latin America that there is a phenomenal opportunity. It's a green field. When you go to Silicon Valley, and when I come to a conference, there's 400 alternative lenders there, maybe 1,000. I don't know how many there are. When we go down to Latin America, Mexico, there's like a handful. And what these startups are doing, or these fintechs are doing, is they're sometimes taking models that they've seen work in the U.S. or work globally. They're implementing it and regionalizing it, making it work in their economy, and then juicing it up, like making it even better. Mm-hmm. So yeah, returns are important. The other thing is important is definitely learning. Like there's a company that we've invested in called Nubank in Brazil that has just unbelievable online presence. They have their acquisition is phenomenal, even by Brazilian standards. Like the founders have really done a phenomenal job there. So looking to them just to learn how learn from them how it's done. And another one investment we've made is in Confio, which is microfinance in Mexico. There we're actually going to look to do a direct partnership with them, perhaps a referral, so that we can work together to help these smaller businesses. So again, a little bit of everything, but making money, making returns is definitely part of it.
Interesting, fascinating. So to keep in the kind of larger incumbent financial services area for a moment, Edgar, I'd like to ask you for your thoughts on blockchain use in back-end financial services. So it turns out that a fair amount of the really successful startups in the blockchain technology area are trying to service the big financial incumbents. So a company like Digital Asset Holdings, for example, trying to allow the financial markets to settle and reconcile their trades much faster than they have been able to in the past. So while, of course, high-frequency traders can swap stocks in a tiny fraction of a second, it takes often at least a day for the money to actually move, and you wind up with actually often 10 or more % errors on both sides of the bank's ledgers. And so some of the new blockchain technologies like Digital Asset Holdings approach is to try to make that a lot faster. And I'm curious for your thoughts on whether sort of first, is this real or is it kind of just hype that will sort of fizzle out? And if it is real, what you see is kind of the timeline and how you think it will actually change the infrastructure. And then I'll be curious to actually go back to Dubie to ask for their thoughts on this stuff, which I know they're involved in as well at Scotiabank.
Thank you. Well, first of all, we have to look at the difference across geographies. If we're going to look specifically at the case of the US, for instance, I'm very pessimistic on that. And let me tell you why. To have any meaningful change in financial services in the US, it takes quite a bit of time. Usually Congress has to be involved, the financial regulators have to be involved, the SEC, the Federal Reserve, the different regulators in each state for banking. So therefore, if you think about going from the process right now for trading that we have established for decades to something that is going to be leveraging blockchain, for instance, that's going to take decades. And why? Because it's going to be a big effort. Usually banks are very sensitive about the type of information they have, so they wouldn't be very happy to share information unless that's going to be anonymized in some way, so no competitor will get access to competitive information. So from that standpoint, banks definitely will have to go through a really internal process of deciding what can I share in order to make this efficient for everybody. Of course, the goal indeed is to leverage the technology. Eventually, what we're going to have from Bitcoin left is going to be blockchain, the structure, the ledger that it's going to hold information for different assets. That's going to be what's going to stay. But for banks to leverage that, they're going to go through associations with other banks. There are consortiums working on different developments in this regard. There are some experiments there. But to be applicable to real banking, to go from the trading that you mentioned to minutes from the days that we take now, that's going to take a long time. That being said, there are some markets that are going to be more eager to try this. Think about Singapore. This country, for instance, even in the case of fintech, they are very aggressive in terms of promoting the country as a hub for investments in fintech. And that's great for them, because when you think about Singapore, you're looking not only at this small island there, city island there, you're looking also at Indonesia, Malaysia, China, Australia, countries that are in the area that eventually are going to be influenced by that emergence of solutions in Singapore or Hong Kong, for instance. So they are more open to that. In terms of fintech, for instance, they are interested in bringing investors, bringing VCs, bringing talent to create new companies, and that's what they are doing. And they are also creating regulation that is helping the companies to operate under less stringent regulations than established financial players. Some might say that might be unfair, but to be honest with you, it's very expensive to operate a bank. And if you cannot ask that type of requirement from a startup that is starting from a small base. So perhaps there's something there that the US and Latin America too can learn from these developments in other more developed countries.
It's interesting you mentioned Singapore's sort of more looser regulatory approach in order to try to kind of embrace fintech startups. do you think that that notion is sometimes called a regulatory sandbox approach is really important for a given city, country to become a leader in this? And would you suggest that any South American countries take this approach? And if so, which one? Where do you think the biggest potential is?
Mm-hmm.
Like which country would you, or which city would you say they should pursue a regulatory sandbox?
Well, when you think about Singapore, what do you have in Singapore? You have water and you have Singaporeans. So think about what they need to do to really attract talent, to create investment in the country. And obviously you have to be open to these approaches. I wouldn't call it loser, because a loose approach, because at the end of the day, when you think about a game that everybody's playing, at the end of the day, the rules have to be the same for all of them. But I believe that there is a stage when entrepreneurs, startups need some support for not to be constrained by the rules existing for many bigger companies. So in that regard, I think that approach is feasible. It's not an unlimited process, an open-ending approach, but nonetheless something that is going to help these companies to develop, to acquire initial scale, to be able to be profitable later. Obviously, in that regard, I see efforts in Chile or Mexico, countries that eventually are very creative. They're looking at what other geographies are doing, and also would like also to go through this sandbox approach when they are thinking about promoting their industries and creating a leapfrog event. You don't have to build any new things that will again, because it's already there. So you learn from a more developed economies, and you try to leapfrog other countries that went through longer processes than you.
Mm-hmm. Yeah, I think Chile has made a number of efforts in this direction, not necessarily just around fintech, but they have a Startup Chile program that has brought a wide variety of startups from around the world to Chile in exchange for sort of free money in space, I think. So that does seem like a logical place. So Dubie, I understand that Scotiabank is one of the participants in the R3 CEV blockchain consortium of big banks. So I'd be curious for your thoughts on what that's all about. Why are you participating? What do you hope to get from it?
Yeah, so the thing with blockchain, it's so super easy to understand. There's a lot of conversations about, the cryptography, the exchange of keys, private, is it safe, is it not safe? I think the fundamental thing to understand, it's super easy, is what it is a distributed ledger. That's why there's so much hype, because many, many business models are based on a centralized ledger, like banking, like the stock exchange, like a registry of real estate. So this is why it becomes so disruptive and so fascinating to everybody what this potentially could do. Edgar is bang on. It is not ready for prime time. However, it is coming. So I'll just share a very quick story. 20 years ago, I was with AT&T Labs, and we were building a service that enabled you to set up a store online by yourself, and it was called Secure Buy. It looked exactly like Shopify, exactly. 20 years ago, I presented it to the board of the directors for the bank that I was working for, and they loved it. We'd had it in pilot. A couple merchants businesses were using it, and the guys said all I needed to do was get some advertising money. And the board said, you know what? It's a shame is that nobody's ever going to buy anything on the internet, so we don't need to launch this. It's not safe. It's just never going to happen. And they patted me on the head, and I actually left. And I thought, okay, these guys must know what they're talking about. No one's ever going to buy anything on the internet. So the point Edgar made is totally valid. It's not quite ready, and it's going to take a long time. It only works at scale, and there are a lot of adoption issues that need to be sorted out. But it is coming, and it will be very transformational. And why it's very important that the youth of today understand it is because we, just like with Netflix or other business models that have been created over the last 20 years on the internet, we don't even know what we don't know. Like, we can't even think about it. We're talking a lot about existing business models, trade finance, payments. That's all cool. But you guys in this room are going to figure out what the completely amazing application and use case that is coming in 10 years or whatever it's coming, but it's coming for sure. And what was the actual question?
Well, so I think you bring up some fascinating issues, that there's sort of two sides to thinking about blockchain and the Bitcoin obviously being the most prominent and successful application of blockchain technology so far, and which is a public or permissionless ledger that anyone can participate in and anyone can view all of the transactions. And of course, the ledgers that are being talked about at the big banks by R3CEV that Scotiabank is part of, it would be permissioned ledgers where only certain people with the right credentials would be able to observe all the transactions. So it would look very different from Bitcoin and be quite private. So I guess I would have, you were just speaking a little bit to kind of the Bitcoin side of things, which is this is the next general purpose technology and is going to transform, financial services and the way that money moves writ large. But on the smaller side of the kind of permission ledgers, what R3CEV is trying to build, do you have a sense of what Scotiabank or what you envision it doing in the near future, like the next kind of 5 years?
Yeah, we've got 12 use cases that are kind of almost or actually in production. They have a lot to do with capital markets. A lot of the early use cases of capital markets. Trade finance is a big one, right? Because there's lots of.
I'm being told we should hold it more like this.
Oh, hello. Okay. Trade finance is one. Gold settlement is one that's has a more closed group of users. That's one. So I loved Edgar's points about scale and how long it will take to get like big adoption. So the first use cases are more closed and tighter groups because you can get those people or those entities together. And then we're doing a lot of internal stuff where we're trying to figure out how to gain some efficiencies between even ourselves, moving money between ourselves and Peru, as an example. You'd think it would be actually a relatively easy process. Not super easy. So we're actually down the path of using blockchain to move money between the Latin American countries, as an example of things we're doing.
Interesting.
Yeah.
That's really neat. So does anyone else have if you guys have any thoughts on blockchain, feel free to jump in. Otherwise, I'll go back, retreat to payments. So Zay, I wanted to ask you about, before For All, you founded GetNet, this payments company. And what I think is so interesting, one of the things that's really interesting about GetNet is that you exploited a major efficiency in Brazil, which was that the existing payments technologies or payments systems had the physical devices in the stores would either only take Visa or only take MasterCard. So the retailers had to have both machines. And you said, well, I'm going to build a machine that will take both of them. And so I'm curious how you came to that kind of realization and and a little bit maybe about how you sort of built GetNet. But then also if you could talk about, for students here who might want to exploit this sort of inefficiency or friction that they might find either in Latin America or elsewhere in the world, do you have any suggestions for potential entrepreneurs in terms of finding those frictions?
Behind all these opportunities, it's you see that the opportunities is in front of us. It's what I saw when I started GetNet is it doesn't make sense. A big country like Brazil, and with this, if you would like to accept a MasterCard, you are obliged to accept one specific network, and if you would like to accept Visa, you're obliged to accept the other network. And when I saw all over the world, all these big countries, it's open. It's possible to compete. So it's and I started a closer network before. It's at Bonjean when I was working there, and I saw that it's hard, but it's possible to do. And what is really important when you would like to face a big market, is not to do by yourself alone. I tried to do, when I saw this market, so I need old brother, bigger than me, to go together with in this fight, because alone I don't have. Maybe the investors have money to do that, but it's something really hard to open a market, to create capability to compete with these two big companies with behind them the big banks. So I set a partnership with Santander. Santander was the largest MasterCard issuer in the world, and the fifth Visa issuer. So they had and still have the capability to talk with MasterCard and Visa and say, well, I would like to participate in this game. So I have a partner. Here is GetNet, and we will join together to compete in this market. So what we did, I started doing everything. I was the excluded network for everybody that was not MasterCard and Visa. And we create a big network before, 100,000 merchants. And we start talking with big banks, HSBC, Citibank, and Santander. All foreign banks that can have capability, or they are good to do this game, to enter in this game. And we started the partnership with Santander to dispute the game. So, of course, we did a lot of things to be different from the, now you can choose, we are saying to the merchants. Now you can do better. And we develop many kind of products, not offering just the credit card. So we compete doing many things together. One is to join together with a big bank to have capability to dispute the market, to open the market. Two, better than the it's not something that we need to be better than them. And third, to have more products than them. So in all kinds of cases, when you face a good opportunity, not try to do by yourself. It's alone. It's all the big opportunities you have to this kind of approach, collaboration, cooperation. Try to do something together with the others. Not try to do by yourself and thinking by yourself as you can do everything alone. It's a kind of attitude, transparency, values, cause. Behind all this good, the new mindset that we are facing, the new world is it's this new kind of mindset. So if you'd like to do something really huge, attitude, join efforts with people that have the same values that you, and it will be able to do everything you want.
Those are some very inspiring suggestions. In a couple of minutes, we'll move to questions from the audience, and so please submit them online via the app. And the last question that I'll pose and kind of open it to whoever wants to take a stab is around the sort of development of a fintech, venture capital, and entrepreneurship ecosystem in South and Central America. In the past, the vast majority of venture capital funding has gone to fintech startups in the US and China, and to sort of a third degree Israel, perhaps, and then some in Europe. There are a few well-funded startups in South America. Nubank, that Dubie mentioned, has raised around $235 million, I think, in venture capital funding. You also have Compara Online in Chile. But what do you think is kind of needed to build a more vibrant ecosystem, particularly given that we know from academic research that most venture capital investment is quite local, that investors tend to invest in companies that are physically nearby, and that's one barrier to investing in, potentially for a Silicon Valley investor to invest in South America. So what do you think is kind of the building blocks, and maybe that people in the room could help contribute to building an ecosystem there?
I think that Latin America is a huge opportunity. One of example is the fund that Dubie mentioned, KeyD. KeyD was sponsored by the founders of the Capital One. That for me, it's one of the best case of innovation in the world. And they got in Latin America by accident because they met the founder of Nubank. And now the fund are 100% concentrated in Brazil, in Mexico, because they are finding very good entrepreneurs, and it's more easy because, for example, in China and in US, you have like 10 companies doing the same. So it's very difficult, like, to choose the one that will be the winner in the end of the day. So in Brazil, you have few For example, in my case, that I am in a microfinance, I'm alone. So I'm in a blue ocean. So like different if I was in China, for example, or in India. So I think that Latin America, and with the case of New Bank and KED, that invested like 110 million so far, and the value of the portfolio it's $500 million. So they have a return of 5 times. Show that Latin America it is in the right moment for the fintech landscape.
And just because the QED, the latest fund is in partnership with Scotiabank, it's funding is one thing. Both debt and equity funding is important for sure. But the other thing that you reminded me, what you were talking about, that is mentorship. So as business leaders, if we can support that, their growth and mentor, as to your point about a healthy ecosystem to give back, it's not all just about competitive, it's about stimulating and cross stimulation. That would be another thing to give back into the region.
Talking about ecosystem, we obviously in the US have a great system at Silicon Valley of angels, founders, former founders, also who are serial entrepreneurs, and eventually venture capital firms. That's something that probably we still don't have in the US. As you mentioned, Israel or Silicon Valley, those are hubs where you have an ecosystem there that is working to eventually create the next Facebook. In our countries, in Latin America, we're still looking for that. Perhaps you see venture capital firms operating there and looking for opportunities, but sometimes the idea needs some help even before the stage when a VC can invest. And that's the role of angels, the people who might come to conferences like this, who are looking for new ideas where they would like to invest. I remember a few years ago in a Lava conference, Gustavo Cisneros said, if you have an idea, come to me, and I'll help you. And I don't think a few weeks ago, Adriana Cisneros said the same thing. So you need to find those Gustavo Cisneros people or people like him who can definitely bet on you before a VC will do it. Your idea might not be fruitful enough, might not be ripe enough, but eventually you will get to that point when a VC will come and you will be looked after from many VCs. So obviously that takes some time. Come to conferences. I think that's what you need to do. Networking, mentorship, as you mentioned, it's important. And I think that hopefully will create a hub also in Latin America.
Oh, yeah. Thank you. Zay, do you want to add anything, or should we move to questions?
It's the 3 pillars of the success of a startup. Is one is not enough to have a good idea, but it's a good plan too. And the difference between the success or not success is the execution. Is the first point. It's a good dream is okay, but execution is the first. Second, don't try to do by alone. Even as an entrepreneur, try to get a good team together with you. And third, there are a lot of money in the world, in all countries. Money is not the problem, but to select the correct person who is in charge of this money to help you to grow, it's the main important thing. There are a lot of people offering money, but which one will trust in you, trust in your idea, and help you in these difficult phases that you are facing? That's the 3 pillars of success, in my opinion.
Fascinating. All right, we have crowdsourced questions here. I like the idea of using a market mechanism to determine which we answer first as an economist. So the first one is pretty interesting to me, that has gotten 9 ups, and this is for Dubie. So both finance and technology are industries known for being male-focused. How has your experience as a woman affected your career in fintech?
It is a real challenge, and it's a real problem in technology, not so much in business grads. I think the numbers are very strong in terms of diversity. In Canada, I don't know the global or the Latin American numbers, but I'm sure they're equally as shameful. We're down to around 20% of IT grads are female. So it is very, very important that we up that number, because without that kind of diversity, it is a challenge. It will be a challenge, and the next generation will suffer for it. So we're very, very focused in Canada trying to improve those numbers. And so I personally try and invest a lot of time, because I am a technologist by background. Listen, I have 4 kids, so What could I say? I think that it's very important to have balance in life. It sounds like a cliche, but we'll all have families. We'll all have startups, businesses, and all of these adventures that you're going to have in your life are all very important. But just as is, having a family and enjoying all the things that life has to offer is I don't know, is the important way to mix things up.
Wow, I'm impressed. All right, next question. Also a big topic in the world. Bernardo, Latin America is the most unequal region in the world. How can financial inclusion fight this?
This is a very good question. First, let me share some data with you. Financial inclusion, it's not good in Brazil. I have 50% of the client that has a bank account and 50% that are out of the system. My clients that is out of the system are good payers than the client that has a bank account. Why? Because when you open an account in Brazil, the first product that the bank give you, it's a special credit line called Cheque Especial that the monthly interest rate is double digit. After, a credit card that is a double digit. So I think that if you want to play in financial inclusion, first, you need to have a real purpose, because if you design the company just for the shareholders, you're going to kill your client. So Avante, as a B Corp that use business as a force of good, we create a model that in the end of the day, we have a very, very low cost of acquisition, around 200 reais, and you have a lifetime value 10 times of our cost of acquisition. Why? Because we designed an efficiency channel and designed products that fit our client needs. For example, this is a POS. No monthly fee, no hardware cost, accept all credit cards in Brazil. So it's very important to focus in the financial inclusion, but has a strong purpose. For example, when I go to my board meetings, I have 11 KPIs. Just 2 is related with performance. The 9 is related with purpose and people. So if you want to be a winner in this game of financial inclusion, you have to address people and propose plans. Otherwise, you're going to be another bank that try to create a financial inclusion but kill the clients.
Next question is for Edgar. What are your thoughts on active versus passive investing in less efficient markets such as Latin America? Can robo-advising succeed in these markets?
Well, as we still have a long way to think about passive investing in Latin America, as it was mentioned before, only 56% of people in Latin America have a bank account. So if we don't pass that barrier of penetration, financial penetration, we still have a long way to think about ETFs, for instance, for passive investing. Robo-advisors definitely are a big trend here in America. Many companies, financial institutions, asset managers are looking for ways to be more efficient, and they think that providing this type of services could be helpful. There is a market for these instruments to be invested at. Obviously, ETFs, stocks, indexes that can be perfectly suited for passive investing. But I'm not sure in Latin America we have that type of development yet. The good thing about passive investing is a very efficient way to invest in the markets. So from that standpoint, it might be something attractive for the growing middle class that we have evolving in Latin America. So I think there's a future, but I don't think it's going to be that soon that we're going to see a big push as it were here in America.
Interesting. All right. Our next question is for Zay, I think.
Zach is my nickname too.
Oh, I see. Okay, lots of nicknames. In Latin America, there are no services like Venmo and Mint, for example. So Venmo, of course, is PayPal's mobile payments app, and Mint is a financial aggregator that people can use to track their spending. Do you think bank policies and legislation are the main reason, or are there others?
It's good question, because what we are seeing is the growth of many kinds of startups doing this thing. They are not famous, not yet, but they are doing almost the same of Venmo and Mint. And I don't care about rules, because if you have some difficult rules, it will be the same for all the competitors. So if you are good, it's not a problem, in my opinion. Because the game is the same for all. Okay, there are some countries, and it's better to choose a country that has less problems, less rules. But if you have a big country like Brazil, or many big countries in Latin America, rules is not a problem to have your startup. The point is, we are seeing here in Latin America the growth of many kinds of startups and many kinds of new companies doing the thing that it's, as Bernardo said, it's a huge opportunity, because you don't have many competitors doing the same as you see in China or India or America. So Latin America has this opportunity. It's big countries, a lot of consumers, a lot of big kind of opportunities, and it's a new market. That's why I start for all in Brazil, not in America. People ask me, "Oh, why didn't you start for all in America?" Oh, because Brazil has more opportunities to do that, and after that, well, who knows? Maybe in America next year.
Sounds good. All right, this is not directed at anyone, though perhaps more for Bernardo. Is microfinance really bringing down the cost of credit, or just making expensive credit available to more people? If I can add a small caveat, an economist might say that when people don't have any access to credit, the cost is infinite. So even expensive credit is substantially less than infinity. But I'll let Bernardo answer.
Okay, remember that I told you that we have 11 KPIs. So one of our KPIs that we have proposed, it's a cap of our spread, okay? So in my case, because we are a new company, we're gonna complete 5 years, we have a very competitive cost of acquisition because of our technology. And we are multiple products. We have like microcredit, we have payment solution, and we're gonna launch in the second semester bank account. But most of the MFIs in Latin America, they are still facing the problem to have a branch, to work with paper, and they have a higher cost of operation. For example, in Mexico, the largest MFI, the cost of operation is roughly 50%. Our cost is 15, so 30%. So, but I'm sure that all the MFIs are struggling to down the cost of credit for the clients.
All right. Do we have time for more questions? Yeah. Next question is, what emerging financial innovations seem likely to improve access to banking services and credit at a reasonable cost for low-income consumers in Latin America? So microfinance is already one that Bernardo's talked about. Have any others? Okay, we'll move to a directed question. Here's for Dubie. Is your group centered in Canada, or are there fintech digital-focused teams in Latin America? How does your team maintain an international perspective?
So we have teams in every one of the countries that I mentioned in these digital factories in Chile, Colombia, Mexico, Peru, and Canada. And the way we have local teams, and then we also have what we call enterprise teams that try to tie in and set a strategy for conversations like the blockchain conversation, or another one is, we just hit on a little bit, as how does artificial intelligence or the evolving artificial intelligence and deep learning help us evolve the financial services. So we have both models. team that's overseeing what's going on globally and making sure everything's connected, and then teams in the country. One thing we try and do is when we develop a technology like blockchain we were talking about before, is we try and keep the software as open. And the concept is open. So we will create a base and then we'll ship it to each one of the countries. And by the way, it's not just Canada going this way. Very often it's Chile sending it back this way because there's phenomenal talent in each one of those countries. So we have a methodology to share across borders.
Interesting. Finance is about trust. How do you deliver fintech service in a region where people can be very wary of banks?
That's a good point. That's a good opportunity. That's why it's good to have to use this opportunity, because there's a company in Brazil called Warren. It's they open a new investment company. It's easier to take a loan from someone that you don't know, because if it's someone you don't know have a problem, it's not a problem for you. But put your money, the deposit or investment in a company that is a startup is a huge problem. So what's a good thing that is growing in Brazil? It's new startups that they are using the good thing of a big bank as the reputation, together with the efficiency and with the financial service. So we are seeing that some big banks offering the ability to create funds to support this kind of a new investment company. So, and the same thing for loans too. So that's the good part is to collaborate to offer better things to the market will be one of the good opportunities. So, but anyway, we see that in Brazil, especially the banks, they are the interests are really big, but now they are realizing that they need to change to dispute to the market. And startups like Avante and others, they are pushing the market to a new level of relationship that could be nice for everybody, and it create new opportunities to do by. But anyway, collaboration is the secret to do the best in this kind of situation.
All right, we have time for a few more. So, Bernardo, how do you measure a customer's character on your system?
Actually, we have a questionnaire that it took for our agent between 18 and 22 minutes. So we address a lot of questions based on personal values. For example, what is the value that you most like? It is a multiple choice. And then our algorithm work with artificial intelligence, try to understand what is the questions that our data scientists select that has a real correlation with the result of our credit portfolio. But there are questions that was already proved by a research, and we have around 20 questions about reputation.
Wow, that's a lot. All right, our next question will be, I'm going to switch it around a little bit. How challenging is a Latin American regulatory environment for a finance technology startup? How can a startup overcome these challenges?
I don't know, but I don't think that it's a problem in Latin America. When GetNet had an operation in Chile, okay, it's much better than Brazil. The rules, yes, of course, but no rules is not good too. So I don't have this a problem. In America we have a lot of rules, and in Brazil the rules that we have here, the problem in Brazil is more the tax point of the vision. So it's a problem for every kind of business that you have in Brazil. But to talk about financial rules, it's not a problem. Even in other countries that I know, in Mexico, example, but there are rules for banks, but for fintechs, it's not hard to have it in operation there. In my opinion, it's not something that is the main problem, this kind of thing.
Interesting. Are the regulatory environments vastly different across the countries that makes it harder to have a kind of pan-Latin American strategy, or would you say they're relatively well integrated? It's a view that anybody have any ideas?
I would say there are differences, but I would support what you said. I don't think it's a huge hindrance. And from a banking perspective, obviously we have to be aware what the regulators and I would support the fact that regulation is there for a reason, and actually to protect consumers. It's not meant to be a hindrance. I think we at the bank have been very impressed by the number of regulators that have stepped forward in many countries that have proactively come to us to ask us and to gain inputs, or going to the startup community and are really trying to engage to understand how they can support growth. So I think I would say yes, the regulations have to exist, but they are looking at ways to continue to support the ecosystem.
Interesting. All right, I think we'll take one last question. Just take the one at the top. Why is fintech, and more broadly, why are startups starting to have such a large presence in Latin America? So this is sort of a why now question.
I would venture that probably that. I think the main reason I feel is that the availability of online services. I think if you think about Latin America, we don't have to go through broadband, through dial-up stage to go online anymore. Now everything is wireless, and we don't know what's going to be the next development. But there's a leapfrog event there that is helping Latin America, areas of China, areas of Africa to actually go skip many of the stages that other countries had to go through, which might have been very, very expensive for the citizens there, but a way for them to become connected. And obviously the availability of the internet and the information that is accessible now by everybody around the world is definitely helping to see what's going on in other markets, and that's definitely creating the development in there. If you think about Bill Gates, at this very moment, there might be at least 10 Bill Gates in China. But one of them, or many of them, might not have online access. If they have online access, listen to me, you will see more Microsofts coming out there.
All right, that seems like a good place to end. Let's thank all the panelists.